Hey YouTube, this is Zach with Achilles Financial. Today we're going to be talking about Lululemon Athletica, also known as Lulu or Lululemon. They trade on the NASDAQ under the ticker symbol LULU or Lulu, and they are a sporting apparel company that has recently branched out into a number of other different types of clothing lines. The reason I want to talk about Lululemon is because this is a company that, as you can see, over the past 6 months and over the past year in general, they have been on an absolute tear. Now, the stock market as a whole has continued to perform incredibly well, but this is definitely a standout. If we look at the chart associated with Lululemon, I want to highlight their 3-year success. Now, this is a company that could easily be overlooked when we're looking at overall retailers, because a lot of companies have done very, very well over the past 3 years. What I want to highlight is this is a company that has come into the sports apparel space and has begun to dominate. Not only have they done that, but they have done so incredibly profitably, as well as the fact that they've come in as a premium or luxury brand. You can see that the company came in and they actually had an all-time high of, I believe it was $417 a share and 85 cents, and this was less than a month ago. So they've come off of those all-time highs because there have been concerns surrounding the inflation fears and surrounding supply chain, as well as are people going to continue paying such a premium. Again, we had some relatively weak earnings from some of the retail manufacturers, and for that reason the stock has declined from their all-time highs by about 5%, trading currently at $388 a share. Overall, though, you can see that it's still up overall on the year and incredibly high off of the lows from 2020. Now, some of the things to highlight real quickly is the fact that the company is trading at a very high premium. PE ratios of 72, price to sales ratios of 10 are not something that you often see in the retail space. Now, something that is incredibly interesting, one of the things that I'm going to highlight here, is that 84.65% of the company is held by institutional investors. That means of their outstanding shares, the vast majority of them are owned by funds as opposed to individual retail investors. The reason why I'm highlighting all of this, the reason why we're going to talk about this, is because Lulu is announcing earnings this upcoming Wednesday. So what they're going to be looking for as they announce earnings later this week is a incredibly strong quarter of $1.18 for their EPS estimates. Now, this is a company that is looking for a very strong bottom line beat. You've seen that over the past few quarters where they've continued to perform incredibly strong. We are going into their Q2 earnings, and I am expecting another very, very strong quarter. The question, and I continue to ask myself this, is despite the fact that we have such strong quarters, is it worth their high stock price? So if we talk about their fundamentals and we look here, you can see that the company is not only growing incredibly quickly, you can see some of the total net income here, but they are doing so incredibly profitably. Over the past 2 quarters, you can see that they've had total revenue of 1.7 and 1.2 billion respectively, and that translated directly into a total net income of $330 million. Keep in mind, this is not a software company. This is a clothing manufacturer, and $145 million in their latest quarterly filing. The reason why this is so impressive is because this is a company that's coming in, they're competing with Adidas, they're competing with Nike, and they're actively growing at the same time that there's been massive supply chain shortages across the entire globe. So how are they doing so? Well, the first thing I would highlight is their brand is definitely appealing to a lot of individuals here in the United States. This is a Canadian company. They went public here in the United States, and they have grown incredibly quickly in both markets. They are looking to expand more into Asia, but right now the vast percentage of their growth is here in the United States in terms of real dollars. The things that I would highlight why they're being valued so highly right now is the first and foremost is the profitability. You can see that on a clothing manufacturer, they're currently bringing in a gross profit of nearly 60%, coming in at 56.87. That is huge. Another company that's running gross profit similar to that is NVIDIA, one of the leading chip makers in the world. So keep in mind, this is a very different company, very different sector, and one that generally is not seeing 60% gross margins. Now, where it does change up a little bit more, and you're seeing this still as a huge increase, is that net profit margin of 14%. So not only are they growing, but they're growing profitably. How fast are they growing is the question. On a trailing 12-month quarter, or trailing 12 months, so year over year, you're seeing 30% growth in total revenue. I'm not going to look at the most recent quarter for revenue growth because that'd be Q4, which is their big holiday quarter, and it's just not going to have the same type of example 1/1. So the question is, will they be able to grow this year over year at a higher rate than they were able to last year, and can they continue this growth going forward? So as we're looking at the expectations going forward, as we look at the year to date, the question is, can they break out to new highs? This is a group and a company where anecdotally, I know a lot of people who really, really love the company. I see a lot of great things for it. But personally, I'm not going to be investing in a clothing manufacturer that's trading at 70 times earnings. The reason for that is because we are currently on an unprecedented bull run, and there are a lot of companies that can continue to perform very, very well, and I don't want to be in retail, and because I don't think that retail is a sector that can do that same type of growth. On the reverse side, I do think that there is the potential to allocate a portion of my portfolio to retail, maybe even to Lululemon. You can see that there's been a lot of institutional investors who have done the same, and I definitely understand the representation there, where if I'm going to go into retail, I think that a growing company who is dominating the space is definitely one to do so. But right now, I've got a company that is trading at a very high price to sales multiple. For that reason, I'm out on this one. But it's a great company. I'm looking forward to their earnings, and I think I may play that. If I'm going to play it, expect to see that in the Discord, which is in the comment section down below. And if you have any questions, feel free to comment down below as well. If you found this type of content helpful, please leave a like and subscribe, as it really helps the channel to grow. Thanks for watching if you made it this far, and I'll talk to you later.